I have to assume that before a lender provides a loan to us consumers, they're probably going to take into account something called the 4 C's: character, capacity, collateral, and creditworthiness. Please, can you decipher all that for us?
Well, sure, I'd be glad to. You know, before a lender gives you or lends you their money, they have a right to find out about you. So when assessing your character, a lender will ask you some questions. They want to make sure you're honest, that you're trustworthy. They want to find out how long you've been at your job and if you have a checking or a savings account and how you've managed those. They need to find out about you.
They also need to be reassured that you can repay the debt. You may have good intentions, but if you don't have the capacity to make your payments, maybe you won't make them. At least that's what your lender may be thinking.
What do you mean by capacity?
Well, great question, Matt. Your capacity means your capacity to pay back the loan or your capability to pay it back. And that depends on your income and your expenses. So a lender might ask questions like, how stable is your job? How much debt do you already have? They're trying to figure out if you're going to pay them back. And this ties into the next C, credit worthiness. It's the measure of how likely you are to repay what you borrow. Do you pay your bills on time? Lenders are allowed to find out how you've handled your debt in the past by looking at your credit report.
What if you can't repay that debt?
Well, Lauren, the question then becomes, do you have something valuable that a lender can try to take from you? That's collateral. They have the right to come after that to try to repay the debt. Or if it's a secured loan on, say, a car, they have the right to come and repossess your car if you're not paying back the debt on the car loan.
Right. Remember that the credit report you have shows the amount of debt you have, if your payments have been late or on time, or if you haven't repaid your debt at all. Hopefully that's not the case. The key here is that this information can stay on your report for years. And Doug, I know that you recently found this out too. You were trying to get a car loan, right?
Yeah, I sure did. You know, until now I never really realized the importance of a good credit score. And to be honest, I didn't even know how a credit score was determined.
Well, you've been pretty good at paying your bills, utilities, rent, phone. But what happened with this credit card here? I see you were late on a few payments last year.
Yes, ma'am, I was. Kind of hit a bad patch when I finished my training and changed companies. But I've made up for it. I have a good job now.
That's a great start. Your age, your earnings, how well you manage your money, these are all factors we consider before extending credit. So is your credit score.
I guess I knew that, but what exactly is a credit score?
Well, a credit score is a numeric calculation based on the information found in your credit report. A computer analyzes the information and adds up the points, usually from 300 to 800. The higher the number, the better.
So those late payments probably killed my score.
Well, it's the main thing, but it's not everything. The amount of money you owe is another key category. If you have a lot of accounts with high balances, your score could be in trouble. But remember, a good credit score is something you earn over time as you make good decisions with your money, which it sounds like you're ready to do.
I'm already working on it.
Okay, well, your credit score took a small hit, but you're still in pretty good shape. So let's see what we can do for you.